Hi, this is Don Lipari, National Head of Private Equity for RSM. Welcome to another segment of Powerhouses in Private Equity. Today we're speaking with Steve Klinsky, CEO and founder of Mountain Capital. Hi, Steve.
Hey, Don. Thanks for having me here.
Steve, I want to take a little bit of a walk, not necessarily linear, through your life and through your career in particular. You grew up in the Detroit area, 60s, 70s. What was that like?
Yeah, I grew up in a town called Southfield, Michigan, which is right on the border of Detroit. I was there. My family had a business, and we had a store in the first big shopping mall in the country, which was called Northland Center. And we lived near there, and my dad managed the store. And it was just a nice suburb where, farms were being turned into housing, and it was just a nice kind of idyllic suburb.
You come out of Harvard with a law degree, with your MBA, and you join Goldman.
Right.
You join Goldman and you co-found the LBO group.
Right.
Those are the go-go years. This is LBO Central.
Well,
what's it like?
When I joined Goldman, I said, I want to be your LBO guy. They said, we've never done an LBO, so you can be the LBO guy. It was a great time because everything was just beginning. So Goldman's first investment that they ever did with their own money, Goldman was like a law firm back then. It was much, much smaller, was a $12 million acquisition of a company called Trinity Paper Bag, and I was kind of the day-to-day deal leader on it. It was a $500,000 investment by Goldman Sachs. The major thing we were doing back then was advising on how to help our client take their company private. There's now 4,000 funds in the world. There were 20 funds in the world. And so it's just very early days and a lot of fun to be at the beginning of an entire industry.
Sure. 84, you roll out of Goldman and you join Forsman Little.
Right.
What led to that decision?
Well, they called me up and recruited me. Forsman Little was the second biggest in the world with 200 million of assets. There were the three founders, another guy my age and myself. The idea of actually being able to be on the ownership side where you're not just doing transactions for people, you actually own the company and work with the business was very compelling.
Talk about your relationship with Ted Forsman.
Yeah, so there were three founders at the firm, Ted Forsman, his younger brother Nick, and Brian Little. They were all fantastic people, very different personalities. Mm-hmm. What I would say about Ted very positively is he was a total kind of entrepreneurial activist. So when he heard that in Bosnia, there was a town without supplies being shelled during the Bosnian War, he organized the supply plane, filled it with supplies, flew himself with it to distribute stuff from the plane. I mean, he was the sort of guy that he wasn't a meticulous, methodical by the numbers guy. He was more intuitive.
Deeply passionate guy.
Deeply passionate, and kind of a take the hill type of a guy.
99, early 2000s, you formed Mountain.
Right.
What did you set out to create?
I had been working for other people effectively for 20 years at Goldman Sachs and Forsman Little in the 80s and 90s. I just thought, having my own shop where culturally I could set it up the way I wanted to would be a great thing. When you get in your early 40s, that's kind of a natural time to think, do you create your own shop or not?
Is the Forsman DNA apparent at Mountain?
Yeah, I think it's a continuation. I think it's all the way back to a family business DNA, to the Goldman DNA, Forsman DNA, and then Mountain. So the Forsman DNA was, we used debt much more conservatively than other firms did. And what happened in the 90s, in the 80s, we would use a lot of leverage and buy just kind of regular way companies. After the recession in the late 80s, we decided, hey, let's buy higher quality businesses with more growth. The transaction I'm very proud of in the 90s that I spent 9 years with a company called General Instrument that went from about $1.5 billion of value as a messed up conglomerate to about $15 billion of value. So that mentality of, hey, it's not about levering up some dumpy company and saying debt creates returns. It's about growing businesses is consistent with Forsman Little. What's very different, obviously, is the culture and the approach, where I have more the Goldman mentality that you build a great team, you build a great cohesive culture, and the strength of the team and the culture will lead us to produce the result.
Let's talk a little bit more about Mountain. This is really a full scope alternative investment organization. You have a hedge fund investing in public securities, and you have the BDC, finance corporation that is putting out debt instruments.
Yeah. So again, the way we think about ourselves today is managing over $20 billion in assets. The trunk of the tree is clearly private equity. We have about $17.5 billion cumulatively of private equity funds, of which Fund 5 is 6.1 and was oversubscribed. We've had public equity, which we call Vantage, ever since 2006. So we've done it for about 12 years now because our LPs asked us to. The private equity LP said, look, you're not about debt, you're about research and building businesses. Please apply to do that in public equities. And then credit, which is the third major part of our business, works extremely closely with private equity. We started it in 2008 after Lehman Brothers went down. I'm happy to say we've never had a bankruptcy or missed an interest payment in private equity here at New Mountain because we start off with safe, what we call defensive growth industries, and then we can build the business. So there were other companies that we thought were very safe, good companies that we admired that were on plan even in '08, but their debt was trading very low because of the crisis. And we said, well, let's buy the debt. If we hold it to maturity, it would make 30%. We really use the same analytical engine for debt and for private equity.
How do you find the opportunities?
We find the opportunities we have a whole top-down process where everyone in the firm every year is nominating the sectors that they think are these defensive growth sectors. We then, based on full firm input, we set up deep dive teams in the sectors that we've chosen, which are always a couple of senior people as team leaders, plus operating partners, plus younger people, plus every expert they can find in the industry as they dive into that industry. And that team is out looking in that space for ideas. When they find one, they come back to the full firm and say, hey, we've been working in food ingredients for the last 2 years. We think we found an interesting idea. And they'll present it, and then the full firm works as the investment committee to challenge it and question it and probe it and give ideas about it, and that's what leads to the deal. So it's really the strength of the industry identification and the strength of the teams we've set up.
You're in touch with the CEO, his leadership team.
Yeah.
There's a perception of private equity that still exists in the middle market today.
Yeah.
You got to clear those hurdles. How do you guys go about saying, listen, we built a better mousetrap
Well, the
here?
way you clear the hurdles is we can now show again and again and again what we've done for other companies. So, we have multiple examples. You say, call this CEO, that CEO, that CEO. Every deal we've ever done is listed on our website or of public record. Every CEO is available that we've ever worked with. Every family or company we've ever bought from is a reference, can be called.
Who are the biggest influences in your life?
I mean, I have to say my family and, starting with my father has to be the biggest influence in my life. From a business point of view, I've been influenced by, again, the Goldman Sachs culture, Force Little. I learned incredible stuff from Ted, Nick, and Brian and the whole firm. I read a ton of history, so I'm very influenced, when you read about people in history, how they handled a situation or what they were like. And so those would probably be my major influences.
What do you want your legacy to be?
I've always tried to argue that private equity is not about risk where you take more risk and you therefore get more return. It's about making businesses more valuable than when you came in. So it's a form of management, a form of creative act. We've created over 40,000 jobs net of any job losses. $3.5 billion of R&D, software, and CapEx. Never a bankruptcy, never missed an interest payment. So that's what I want the legacy to be in New Mountain. And obviously, you want great returns for your LPs and a great culture.
Steve, this has been a pleasure, truly.
Well, thank you.
Congratulations.
Thanks very much for talking to me.